Good morning, everybody, or good afternoon. This is Bonnie Struzik, one of the corporate trainers here at Sprout Mortgage. Want to thank you for joining this presentation of Sprout's Alternative Document Overview. We're going to review a couple products that you can use Alternative Doc, which means not W-2s, and tax returns. Real quick, as Buddy says here, if you did not log in or register through your email and you wish to get a copy of this recording and the presentation, which I will be sending out to all attendees at the end of business day today, please make sure you put your email address in the questions box and we will get that out to you. So let's go ahead and get started. A couple of advantages of Sprout, along with our great non-QM products, is that we want to build a support team around you, not only with the products, but to help you designate a product, have questions with scenarios. We have a loan scenario team that is available to not only answer scenarios with your account executive, but they're the ones that are going to look at your bank statements, which we're going to go through today. We require that you get all your bank statement income done before you register or submit your file. So they're the great resource here that's going to help you with that. I qualify as an interactive tool on our website. This will help you select the product. You can put your scenario in there. It will help you designate a product. Like I said, you have availability to price on there and also do pre-qual. So I will highlight that as well. Acorn, and it's our exclusive AUS system. And it works just like DU, everybody. So we know how powerful it is when you can pull a DU and have full loan approval. Knowing which conditions you need to submit, that's what Acorn is. It's available on Encompass, Calyx Point, and also through our web-based portal type. So if you are interested in this, please reach out to your account executive and we will get Acorn hooked up for you. Our marketing store. You like one of our bank statement products, you want to market in your community. You could go to the marketing store. It will be white labeled for you, so you'll be able to get a free copy via PDF and then sent to you, so you can go ahead and market with that. The business development team, we are here to help you, not only eventually when we hopefully all will be able to go back out in the field to do lunch and learns for your group or any of your people that you work with, partners, networking partners, and also if you want additional trainings within your company, please reach out to us. We'll be more than happy to get that set up. And exceptions. Exceptions are done on a case-by-case basis right now, not a lot of them. Our exceptions maybe lie in with work history. So say, we need 2 years of self-employment. You got somebody that's running at 18 months. That would be the kind of exception we're doing now. Right now, we're not doing exceptions on LTV, loan amounts, or DTI, but please reach out if you have something that you need a possible exception on to your account executive. So I qualify. I mentioned it's an interactive tool. Our website is sproutwholesale.com. You'll see the I qualify tab right here. It's 24/7. If you're working weekends and nights, you can click on there. You're going to fill in all these drop downs. Okay, a couple just to highlight. If you do a purchase, it's going to ask if they're first-time home buyers. It's also going to ask you for your county that your property is located in. Down at the credit information, you'll see reserves. Please put at least 6 months. Most of the requirements now are 6 months reserves on all the products, even though this might be something you're getting a gift for and or using cash out for. Also, employment. Borrower or self-employed is going to dictate your document type. So if you're doing pay stubs or bank statements, please make sure you click all of that. Once you hit submit, it will bring up a recommended product. Sometimes it brings up 2. So from here, you're able to get pricing. You can also get this program summary. So when you hit submit, pricing is going to show up like this. Different pricing. You'll see borrower paid, lender paid. You can have this emailed to you. You can turn it into a pre-qual. It will also have a tab to go to your portal. Now, if you are a first-time user to this, it's going to ask you to register your email, and how they do that is it's going to send you a 4-digit code. You will need to put that on within the computer, and then it will turn around, register your email, and give you pricing. It's only the first time you use that. So really helpful tool, not only to help you figure out what product, but it will give you an idea of pricing, and you can go from there. Acorn, like I said, is the automated underwriting system, another very powerful tool, especially now when maybe some turn times are a little longer than normal. This allows you to pull almost a full DU, very similar to DU, like a full loan approval. It gives you the parameters of your loan. It's very intuitive. It has read your 1003, so it's going to give you conditions on the file. And if you do not get it approved, it also tells you what you did not meet. So sometimes it might just be an error somewhere that you can go back and fix and rerun it. Once again, all free to you to use, very powerful tool. You can have a full loan approval from your borrower sitting and doing it, at the weekend, and start gathering conditions before you send it in for submission. So our products, we broke them up into 4 categories. Our bank statement product, which is one of our alternative products we're going to go through today. We have 2 full doc products. So please know that if your borrower can go full doc, W-2s, and tax returns, you have 2 products to pick from. Our asset depletion is not like the normal asset depletion loan. We look for 110% of your loan amount versus having, say, $1.5 million in the bank to work with. And then our investor debt service coverage, we're very happy to have this back. Once again, this is another product. Your borrower does not need any income. We're going to look for that property to cash flow. So very good product for investors and people looking into build a portfolio. We also do foreign national on these 3 products. So you can do a full doc, our asset depletion, and also the debt service are offered to foreign nationals. So let's look real quick on some of the universal features that we have in all of our products. Cash out proceeds can be used to meet reserve requirements, except on that asset depletion, which we're going to go through. The only caveat is the borrower must have a minimum of the 3 months PITIA in reserves already. Then you can use the rest of it to meet that 6 months. Of course, there's no mortgage insurance on anything, and we do not have county loan limits. So you don't have to look for, say, agency or high balance or any kind of designation with our loan amounts. They're either $100,000 up to $4 million. It doesn't matter where you fall. We do not have limits on the number of properties your borrower owns. So that's a very powerful tool. And also on our investor series, no previous landlord history or currently they do not have to have a primary residence. So the nice part is that will allow them to start purchasing investment properties, say if they're living with family or they're renting. Investor, our debt service programs let you qualify on the note rate, so either a fully amortized. If that doesn't work, you can have the option of using the interest only. Airbnb income can now be used qualifying incomes towards investor loans, and also say if you're using a rental income to qualify. On our full doc loans, please note that we use the primary wage earners score versus the lower of the 2 scores. So that allows you to use both borrower's income as long as that primary wage earner has the higher score. Escrow waivers are available now. There's some caveats for that. Greater than 80% unless required by law, and 90% in California. And they're available on investment properties now at 60% or less for escrow waiver. Just real quick, if you're on reserves, ownership of mortgage finance properties, we're going to look for more reserves. So if you're buying a primary second home, it's just 1 additional month. If you're buying an investment property, it's 2 additional months per property. So say if they had 2 investment properties, we're going to look for 4 additional months reserves on your subject property. So just kind of the FYI. I mentioned foreign nationals, and then also applicants with work permits issued by the United States now qualify U.S. persons, not foreign nationals. So real quick, some universal features. So, if you're just new to non-QM, how do these loans fit in, and where are you going to use them in your pipeline, or how are you going to supplement them with your current offerings that you have? So if you receive a DULP refer, also I mentioned that county loan limits, they don't want to pay mortgage insurance, or they do not have cash out reserve requirements. We've got seasoning issues, maybe on a credit. they don't want to qualify or they can't qualify using tax returns. They don't have that primary home or landlord experience for investors that want to start buying investment properties. And borrowers cannot qualify on the Freddie Mac one-year tax return because they don't have that 5 years. Freddie Mac requires 5 years. We only require 2. So let's get into our bank statement loan. This is one of the most popular loans we have at Sprout. Hopefully everybody can hear me. I just saw, is there audio? The bank statement loan. So we do require you to do your income beforehand, okay? So please don't submit your loan with bank statements. We're going to send that to the loan scenario team. Please send a 1003. You'll notice you can be TDDs. You do not have to designate a property. That also helps with disclosing your credit report, the bank statements. Upload those to that scenario request tab, or please check with your account executive. A lot of the AEs like to review these beforehand. Before sending them to the loan scenario desk, you might not be sure if the bank statements are working. Please allow them 24 or 48 hours once it goes to the loan scenario desk to come back with your income. We also require this form. Very importantly, it's going to tell us the ownership of your borrower. Okay, we require at least 25% ownership to use bank statements, but this way you're going to tell the loan scenario team what that percentage is, and more importantly, what you're giving them. Are you giving them 12 or 24 months business? Maybe it's personal. It might be a combination of the both. Also, you might have additional bank accounts. We allow multiple business accounts, so they might have 2 businesses or one business that has 2 additional accounts. That's fine. Just let them know, and please let them know what kind of business it is. It really helps them, when they start doing your loan scenario or doing their bank accounts, what it is. Is it a restaurant? Is it a dry cleaning? Do I have a courier service? Let them know what your borrower does. Okay. Some of the requirements that we're looking for, the income analysis, like I said, must be done. Ensure all documents listed below are sent to the loan scenario team. So they need the bank statements, the 1003 credit report, and that summary. If you don't give this to them, they're going to struggle. It's going to slow down your turn time. So please make sure you give them all these requirements. Quick on 12 or 24 months. This is going to be your choice, everybody. And what we really like you to do, because of what the situation is with the COVID, look at 12 or 24 months. If you're getting 24 months and the last 12 months, you've actually had the increase, just FYI, if you give them 24 months, they're going to average it over the last 24 months, which could, result in a lower income instead of averaging over 12. Now, same thing going, if you give 24 months and that last 12 months has declining income, they're going to do the last 12 months, okay, if you've got declining income. Also, if you are submitting now and you notice the last 2 or 3 months are very low income because of COVID, maybe that business has struggled, with keeping open, they're going to look for the last couple months to be at least 75% of the average deposits of the previous months. If that's not the case and you're still making the DTI, that's okay. But if you're over the DTI because of those last couple of months with lower deposits, they're unfortunately not going to be able to do your loan. So please review these ahead of time, okay? We will still optimize. And so what the difference between the 12 and 24 months is pricing. So please review that with your account executive, okay? And here's what I just explained to you regarding COVID. So very important to make sure you review those ahead of time, because if you send them 24 months, they can't unsee the last 12. 4 different methods. So once you send those in, you're going to say, okay, well, how are you guys going to do those? So there's a couple methods for business. It's really going to depend, everybody, on what type of employment they have. So if the borrower, on the 50% margin, borrower will receive 50% of the deposits from that 12 or 24 months, and personal accounts if the business is not defined as a 1 to 4. Okay, and I'm going to explain the 1 to 4. So you have the 50%. Most of them are going to lie with a business account analysis. We're going to look at 12 or 24 months. We're going to look at the average deposits from that business and then times it by the profit margin given on what type of business this is and go from there, and that's where their income's going to go. okay? If it doesn't work this way, sometimes they'll convert over to the 50%. So now you have a personal account. This might fall in with your 1099 borrowers, or, you know, say you have a company that has a business, but he pays himself every month. He might say, okay, I'm W-2ing myself $5,000 a month. That's where you would give us personal and business, and they would go ahead and give them all of the $5,000 on there, okay? That's the 100% credit there. Also, if you're a 1099 borrower and you're just using 1099 and you supply the required 1099s, we a lot of times give you the 100% of that. But let's say you're a 1099 borrower for a company, you still have some expenses, and you want to supply bank statements. We're going to look at your bank statements. We're going to average them over the self-employed and only hit you with a small expense factor. But the requirements are that you have to have a regular 1099 or a statement, either weekly, monthly, or quarterly, okay? So this is kind of what the loan scenario team is going to look at. And then we're going to designate the type of business. So this is going to tie into these two as far as your type of business. So type business is going to be your 1099. This is going to be your borrower that does not have any employees. It's typically them. It's a service business, means that you're providing a service. I'm a bookkeeper. I'm a piano teacher. Okay, that would be that. You'll see it's a very small expense factor. Type 2, very similar, but you might have 1 or 2 employees. So once again, small storefront, small shop. Once again, it's still going to be a service business. So I'm providing a business service to you. I don't have the inventory. Okay, I'm not selling anything. Now, if you are, this is where the majority of everybody falls in. Your type 3. This is going to be somebody that's selling product, that has inventory. It's a retail store. It's a restaurant. It's a manufacturing company. We would manufacture widgets. So you'll see that they'll get 35% of the profit with a 65% margin. Now, I want to mention, this product does not require a P&L. But if these factors aren't working, okay, especially with this next couple on, if these factors aren't working, you can supply a P&L, okay? It has to come from a CPA. It does not need to be audited, but if you supply a P&L, they will go back and re-look at this, or also try to maybe use the 50% rule. So once again, there's different options, which is very important to get your bank statements into the loan scenario team. The last one is a type 4. They're a very high value dealer. You see they have a huge expense factor just for the fact that they're doing high dollar amounts. They're doing commodities, precious metals, real estate, anything that's, you know, auto, trucks. They've got huge expenses, and they've got huge deposits. So that would be the high 4 value dealer. So let's get into your bank statement program. Bank statements are 1099. It's a 15 and a 30 or 6, but you also have the option to use our adjustables and the interest only. Okay, here's your margins. It's for U.S. citizens only. We do not do foreign nationals on here. Please run through Acorn if you have that availability. It just makes it quicker for you. And if you don't have Acorn, please reach out to your account executive to get that set up into your system. You can do all the occupancy types. So if you're doing an investor series, you are going to have a 3-year prepay. Self-employment, we require that 2 years, as I mentioned. So 2 years. Now, if the other borrower isn't self-employed, that's fine. So you can have a W-2 borrower and a self-employed borrower. Okay, but at least that self-employed has to have 2 years. I mentioned no P&L. The 50, we can go to 50 on the back end. The minimum score is now 660. Unfortunately, if you're in New York, we're going to look for that 680. With the 660, it's a max LTV to 1.5. So if you have a higher score, of course, your LTV and dollar amounts are going to go up. Here's our cash out max right now is 70% on our primary with a 740. I mentioned minimum loan amounts, 100,000. Here's all your eligible property types, including warrantable and non-warrantable. I mentioned we do all of the permissible primary, second home, and investor. The reserve requirements. Here's that 6 months I mentioned when filling out I qualify. So if you're under 2 million, it's 6 months. Anything over 2 is 12. Here's that additional multiple finance properties requirements and the reserves. So as long as you have 3 months PITIA in there, you can use your cash proceeds for the remaining reserve requirements, or you can use gift funds. Okay, we do allow gift funds on our bank statement product. But you do need to have the 5% down from the borrower's own funds. Credit history, way light. 4 years seasoning on a B Care foreclosure, but if you have at least 2 years, we will go to 65%. Okay, so you need 2, 4 will give you the full LTVs. We'll allow 1 times 30 in the last 12 months, but nothing in the last 6. Here's your appraisal requirements. It's 1 at $1.5 million. I mentioned the temporary COVID measures. Please read your bank statements. Look at them before you send them in so we know where we're going for, okay? If there's less than that 75%, but they still meet the DTI, you're okay. But if not, then we're not going to be able to do your loan. The next slides, everybody, are all the matrices. So I'm not going to go through these with you, but you are going to get them in the presentation. So you're going to get all the breakdown for primary, cash out, second home, cash out, investment, etc. Okay, so I'm going to go now into the asset depletion loan. As I mentioned, this is not the typical asset depletion loan, okay? What would you be using this for? So borrowers are using available assets to qualify as a primary source of income or supplemental, which means your borrower might be retired. They have a very small Social Security. They might not have enough income right now. They're retired, they're on a fixed income and have available retirement assets to use without having to draw on the funds. Borrowers not of retirement age could use a retirement account as supplemental sources of income to qualify. So how are you going to use this? It's a great advantage for borrowers that are limited in income but have money in the bank. And the nice part about our asset depletion loans, everybody, is that you get 100% credit of any of your portfolio. So we do not discount it. Even though you're not retirement age, you will get 100% credit of your retirement account. This also goes for stocks, bonds, any kinds of mutual funds, and also, say, insurance policies that have a dollar amount to it. What we're looking for is 110% of your loan amount. This is the key to why this makes it more available to more borrowers. We're not looking for $1.5 million. So let's look at the example real quick. You're looking for a $400,000 loan amount. The 110%, we're going to look for 440 or greater in that account. Okay, so you're not looking for a large one. Once again, we only divide it by 60. So when you divide that by 60, your qualifying income is a lot larger than normal when you're using any other asset product in our market. Okay. So here's an example. So our borrower has a Voya account. He has $650,000 in his Voya. Okay, that is greater than that 440 from your example, right? So this account will qualify and he has enough funds. So you would take the 650, divide it by 60, look at your qualifying income off of just his $650,000. So that will be your primary source of income to qualify if this works at the 50%. Now, if that $10,833 is not enough, maybe you're at a 52 or a 53, we do allow you to use other sources of income to qualify to bring down that DTI. So if you do have, excuse me, Social Security, or you're working and you have W-2 or self-employment income, you can use it in addition, but you have to meet the 110% to use this account. You can't just add on a little bit. So you can't use this as a supplemental. You're going to use this as your main source of income and use the additional income to qualify. So hopefully that answers that. What sources can you use to qualify? I mentioned funds and deposit on a bank. Now, this also, if you have a business account, you can use that, but we're going to ask for your percentage of ownership. Bank accounts that can be counted as reserves. If your borrower is self-employed, there's your ownership. Once again, 100% value on a retirement account, 100% on stocks, bonds, options, as long as they're one of the Fannie Mae approved sources. If you're using this for a foreign national, because we do allow this on foreign nationals. We can use the foreign stocks and bonds in the foreign national, their country of origin, and they don't need to liquidate them. So those will be included in depletable assets as foreign nationals, okay? Minimum score, 660, once again, except in New York. There's that lovely back end 50. It goes up to 4 million. You can go up to 80% for a primary. We consider this a full doc loan, actually. So what that means is primary wage earner score is used. Okay, so that's the key for that. I mentioned we do foreign nationals. Here are the requirements for foreign national. And I do want to mention, we don't require our foreign nationals to have FICO scores. If they don't, that's fine. So what you'd be looking for then is just a down payment. And even if they don't have credit, U.S. credit, but if they have credit in the United States, then they're just going to have to meet that 660 score. They'll just have to meet the parameters. So down payment and closing costs can come from that account. So that Voya account, if you remember, had 650. We only needed the 440. So that means they could also use that account for down payment and closing costs as long as that 440 remains in there. Reserves are the same. You still have those additional reserves if they own additional property. No gift funds on this because it is an asset-based account, but we do allow gift of equity, okay, only on primary homes. Here's your mortgage history, which is the same, the 1 times 30. So once again, here are all your matrices for your primary, for cash out, your second home, and investor. So it's pretty cool that you could actually buy an investment property using assets in the bank. And that would happen if, say, your property didn't cash flow and you needed to qualify for them. So foreign national, I brought up, we have 3 products. The A11, the one I just went through, is one of those foreign national. Also the jumbo and our investor debt service coverage you can do foreign nationals on. So real quick on our foreign nationals, there's some additional info. If your foreign national is interested in a primary, we would require this documentation. One, they would need to have a valid Social Security number or that work eligibility that we allow now to consider them a U.S. citizen, okay? Or any one of these options down here. Now, if they're eligible to be eligible for a second home or investor, those are the visas that we allow on our foreign nationals. If you have any of these, we do not allow them, including diplomatic immunity. So real quick on there, foreign national income, we do them very similar to U.S. citizens. So if they're a salaried or self-employed, we know a lot of times their country of origin doesn't produce W-2s, pay stubs, and or tax returns. So we would take a letter from the borrower's employer or a letter from a licensed CPA in their country of origin and just designating what their year-to-date is and their last 2 years of income, okay? We do require that CPA to be licensed, and a copy of that business license is required. Now, also, if they have rental income, they might have rental property in their country of origin. That's fine. We will allow that as well using 3 months bank statements and a copy of the lease. But please note, all of this would have to be converted to U.S. dollars and or translated by a reputable translator company, okay? Credit reports. I mentioned running credit. We don't do an international credit report. We don't require one, but we do require credit. My best recommendation is please reach out to the loan scenario team or your account executive how to do this. It gets tricky because they don't have Social Security numbers, so you can put either I's or 9's in there, and also their addresses. If any of you have ever seen a foreign national address, they're different. So sometimes you're struggling how to put their address in. So we're here to help you to show you how to do that. Also, if you want to use a POA, a power of attorney on a foreign national, these are those requirements. Okay, you have to meet these to be able to use a power of attorney on a foreign national. Once again, we are here to help you. We want to be a tool so the loan scenario team and your account executive are both here to help you not only designate or run through your scenarios with you. Please send your 1003 credit report, also condo questionnaires. So say you have a non-warrantable condo. please get that HOA, or if it's in litigation, those documents, send it to the loan scenario team. They're going to look at that project, see one, if it's already approved. If not, they'll get back to you and start working to see if we can do that under our non-warrantable option. Upload those to the scenario request tab on our website, or on the bank statement. Please check with your account executive. They want to look at that first. There's additional information on our loan scenario team. Okay. I mentioned the marketing store. The marketing store has quite a plethora of different flyers. So any of the products that you like, and like I said, you wanted to go ahead and market, you are allowed to, we'll give you a login and a password to the marketing store. You can go in, have them all white labeled to your information. You can choose to have them printed for a small fee, or a PDF, which is absolutely free. It's sent right to your email. You download it printed. You can market it any way you want to. Reach out to your account executive to get your logins for the marketing store. It is, like I said, a different website. And then also, once again, the business development team. We are here to help you in any way we can with additional training, and hopefully in the near future to do lunch and learns in your offices, or with your referral partners. Very important. Loan submission training. You're all excited. You're ready to send a loan to Sprout, but you're not really sure how to go onto our website. How do you register it? How do you upload it? Lori Kokosinski does training twice a week on Mondays and Thursdays at 1 o'clock Eastern, 10 Standard a.m. in the morning on Pacific Standard. You can join it. You don't have to register for this. You can jump on anytime. Here's the information. It's also on our website, so if you log into our website, there is a line across the top that clicks here that brings you right into the webinar. So very easy. I wholeheartedly think so. Hopefully that will help your team. I mentioned more product training. You can, in person, any questions about how we can serve you better, you can email the biz dev team. That's the end of it, but at the end of this is also an appendix that gives you condotel requirements, our non-warrantable, what falls into non-warrantable and why. So if it's not meeting FHA, VA, or agencies on your condo, there's a quick reference on just some of our, what our products are, and also the banking institutions and unfortunately states, because of OFAC, that we cannot lend in on your foreign nationals. So that is the end of our presentation. I wanted to keep it to a half hour. It's a lot of information, and like I said, I will be sending this presentation out to you. So you will have this also with a link to the recording, since this was recorded. I'm going to jump real quick now over to the questions. If you don't want to stay for the questions, you're more than happy to leave. I want to thank you for your time. And once again, if you have any additional questions, please reach out to your account executive. Let's see, one of the questions from Jan is, any New York State overlays for 12 months business bank statements? No, not that I know of. There's no overlays for the bank statements. Just right now, it's just that credit score. And for loans with 3-year prepays, what is the maximum percent down yearly that can be applied to principal? I think it's under the 20%, so they can't put down more than 20%. But you know what, Yasmin, I'm going to find out exactly what that is. But it's the standard prepay, so 6 months interest on 80% of the balance. And I think you're allowed to do principal reductions up to, not greater than that 20%. But I will check that out for you. Great question. And I will give you your answer when I send out all this information. So let's see. What is the max? Oh, I see another one here. Hold on. A 10 credit score lower, the max. Oh, Jessica. Oh, okay. There must be something on the presentation I need to assist. Thanks, Jessica. What is the max LTV and DTI for jumbo purchase with tax? Angelique, that is a great question to send to your account executive, please. When you get into that, they can help you with not only the max LTV and DTI, but also taxes and things like that. Oh, 722 score. So once again, please send that to your account executive of the loan scenario team. Asset. Melody, I just see asset. I'm not sure what that question is. Okay, that's it. Thank you, everybody, so much. We appreciate your time. And, you know, it's been a struggle, you know, for the last couple of months, so we applaud your determination to stay in the market. Hopefully all these products coming back are just going to be one more source for you to offer your clients in addition to your current portfolio. So thank you once again. That's the end of the presentation, and have a great rest of the week.